analysts say they expect investors' cautious stance to wane as they resume bargain hunting on fundamentally sound stocks. Samuel Oyekanmi, Group Research and Insights Associate at Norrenberger, joins me for a review of Nigeria's equities market. Thank you so much for taking the time out to join us today, Samuel.
Yeah, thank you. Good afternoon.
Right, so it's Wednesday. The market has had 3 days of trade. Bring us up to speed on the trends that you've seen at the market and why we're seeing investors cautious.
Yeah, well, the market has been relatively bullish in recent times, from last week to early this week. Aside from about Monday and last week Friday, where there were some form of profit taken. And don't forget that the markets were coming from a period of slow growth. In Q1, we barely did about 2% in terms of ASI movements. But in the last 9 trading days, the market has been able to recover, significantly gaining almost 3%. And year to date is pretty much around 6%. So right now, what we're seeing is that because of the uncertainty around general sentiment around the economy, interest rate movement by the CBN, going into the MPC next week, inflation report next tomorrow, there seems to be some level of uncertainty. So what you see now is information driving the market. So for example, today you see Airtel has gained about 10%, and that's on the back of the announcement of the share buyback announced just yesterday. And pretty much that's what we've been seeing happening in the last 9 days. The likes of NASCON, Nigerian Puris, MTN have also seen significant improvement in terms of their share price following improved Q1 numbers released in recent times here.
And speaking about market moving news, there was that news in that story in the news around Seplat. They were able to quickly contain the situation, but we have seen the oil and gas sector, a bit depressed. Obviously, lower oil prices and all of that. But talk to us about what is your forecast for that sector and how investors feel right now.
Of course, investors are quite cautious when it comes to the oil and gas sector, and that's largely on the back of what's happening in global markets. Of course, despite the fact that the US and China have had some form of agreement in terms of the tariffs, there's still fears that it will still escalate, and that could also have some level of impact on crude oil prices. And then OPEC arrangements around driving supply into the market, how that could also impact crude oil prices again in the future, has made the oil and gas sector pretty much quite a little bit dicey, and that has pretty much impacted the level of positive sentiment around that. So what you see is a number of investors would rather go to areas like consumer goods, a bit shy from banking stocks, but pretty much what you find is around industrial and consumer goods. Oil and gas right now, due to the uncertainty, we don't see so much movement around that.
And for investors who are bargain hunting, where are you seeing cherry picking, starting with the banking stocks?
Well, for banking, there's pretty much nothing really happening right now, so it's quite calm. We see their numbers and we know what to expect from their numbers. Aside from those before now who had gone around stocks like Zenith, GT, dividend payments and whatnot. But as of right now, the market is quite calm when it comes to banking stocks. Most movements, you see them around telecommunications, around consumer goods, industrial goods. Yeah, but the banking sector pretty much calm. And of course, based on what I said, there's really not so much going on right now.
So what will be that catalyst for the market? I know that the MPC meeting is coming up. Is that something investors are looking forward to?
Definitely. The investors are eyeing, even from tomorrow, inflation report, because, of course, on the back of whatever happens tomorrow, it's what you expect the CBN is going to move around. The CBN governor at some point this week mentioned that they will maintain the orthodox course, which would suggest that if inflation remains elevated, they would probably still hold interest rate. And on the back of that, you start seeing investors making decisions. I think we might be seeing a whole decision. And if that is going to happen, we might not really see so much bullish movement in the equities market. And if there's going to be, it's going to be cherry-picking stocks that are quite defensive, having very good fundamentals.
And even though we know that inflation is going to remain sticky and still a bit elevated, in the short term. The story around consumer goods, at least some of them, is changing, mostly around the FX issue that they've had in the last year or two or so. But talk to us about, how optimistic are you, and also investors, in terms of how these companies going forward are going to weather the environment, tackling inflation, pressure on the consumer pocket, etc.?
Yeah, I think the market is quite positive around consumer goods company. Like you mentioned, there's high inflation. And when there's high inflation, what happens is that consumer goods can easily pass the cost to their consumers, and that means improved revenue. Then on the back of the impact of FX prices that really pretty much affected almost all the companies in the consumer goods, many of them have been able to rectify that. The exchange rate has been stable in recent times. And for those who have FX liabilities and exposures, they've been able to do some of those corrections to their books. And the expectation is that going forward, we start seeing improved numbers, pretty much very good profitability this year. And because of that, the market senses that those are good entry points. Because don't forget, many of them also lost significantly last year. So those are very good entry positions for investors who would be able to target some form of price increment at some point this year.
All right, Samuel, thank you so much for bringing us up to speed. Samuel Oyekanmi, Group Research and Insights Associate at Norrenberger.